Hello, Maverick traders. Welcome out to your market roundup for March 25th. Corey here with you. Let's jump in. We're going to take a look at meaningful news, broad equity analysis, commodities. It seems to be a theme. Every Monday we come in and talk about how oil is outperforming of late. We'll talk about sector rotations, and then today we have a bull, a bear, a neutral trade idea. We're always trying to highlight our very best opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so looking at today, most equity markets sold off slightly. You can see the Dow, the S&P, NASDAQ slightly lower, IWM, the small cap, slightly higher. But again, oil was up, and that's a recurring theme every Monday. We talk about how oil's up, the market's slightly lower. Gold also slightly higher, but oil in this commodity space continues to seem like the trade, the natural resource trade, is moving. Daily news, we had Reddit go IPO last week, and it continues to rise. And then Boeing CEO steps down, and the stock rose, and this speaks to the problems they've had with the 737. Time for the CEO to go, and expectations are that it will be better for the stock to have new leadership. Advanced decline line, about 60% of stocks going down today, and the 50-day moving average has given some ground. We were up 68%. We're over the 50 when I did this last Monday. Now it's down to 64%. Again, this just kind of tells you that the trend is not widening out. It's basically getting more narrow, that more stocks have dipped below the 50, that although the S&P is somewhat sideways, the internals are not quite as good. And so as we look at the S&P chart, you say, well, from last Monday, we're up slightly. We've been going sideways for a few weeks, but we're up slightly in the S&P. The S&P is top heavy based on the biggest and brightest names, right? Amazon, Microsoft, Apple, Nvidia, those really move, and those have been doing okay. The tech sector has been doing okay, and so the S&P looks okay. But as we dig below the surface, the NASDAQ tried to break to a new high, and look at how it sunk back in. Now, this is in danger of being one of those from false moves come fast moves type of idea. When you have a breakout, let's just draw our line in here, kind of, this is your resistance zone, and you attempted a breakout, and then it failed. From false moves come fast moves. This is where oftentimes you'll see a pickup in speed. Now, maybe it's just going to consolidate more, but ultimately not a great sign for the NASDAQ. And then, of course, if you look at the IWM, the Russell, it also is not to new highs. So as you look at the strength, again, the S&P move slightly higher, but more stocks are now below their 50 than they were a week ago. You're seeing some of that weakness. Where's the strength? Energy and this commodity space has been a stronger area to look, and I see no reason to expect that to stop. I think the energy space continues to be pretty healthy and pretty strong performer right now. Our weekly and monthly outlook. Now, give credit where credit is due. We talked about how we were in a consolidation, and most of the time you'll break higher in the short term when you come from an upward move. And this one did just that. But the question is, how much room does it have to run? How long can it last? I've personally kind of scaled back to a neutral, which at least from an S&P perspective was maybe a little early. But as we said, more stocks have been going down the last couple of weeks, so it's probably the right call. You're getting a nice bifurcation where some things are going up, some things are going down, and that's what we love as traders. Now, as far as bulls, neutral, bearish ideas, I'm going to highlight a few. You can see on the bullish list, it's a mixed picture. We got Dell, we got Prudential, we got Uber, we got Royal Caribbean in the neutral, we got Intel, Tesla, and Walgreens. Let's look at a couple of these charts. So first, Prudential. This is a financial, and as far as sectors are concerned, this is, along with energy, better performing sectors, and Prudential has been in a nice upward trend. Look at the tight consolidation here for a few weeks. This is what you like to see. Breaks out and it's just continuing to churn higher. Expectations are that that's not done yet, so still looks very good for more upside. If we go to the neutral space, I've got Royal Caribbean, and this one broke out convincingly, and now it's just kind of stuck here. And I think we're going to stay stuck here for the foreseeable future. So what I mean by that is for the next couple of weeks, I would anticipate that even if you push a little higher, it's going to fall back. But even if we push a little lower, it's going to rebound back up. And I'm using this 136-ish area as kind of my neutral bound. And when you play a neutral trade, if you're targeting something to play at 136, really it's unexpected that candles will just go sideways day after day after day. That's not really what we're looking for. What we're looking for is as it moves up, it comes back in, or as it moves down, it comes back up, and it stays basically in this neutral boundary. And that's what I'm anticipating is there will be some movement, but I think it gets sticky right around this zone. Last but not least, we've got Walgreens. Now, this company reports earnings this week. Last week, I highlighted Lulu, talked about how it reported earnings, and we had it on our bearish list, and that stock has just been pummeled. I don't know if Walgreens, first of all, doesn't have that type of volatility, but if I were making a play, the play seems to be to the downside. So Walgreens continues to underperform, has consolidated for multiple weeks, and if making a bearish bet on the earnings, I would continue to expect downside, just like we highlighted in Lulu last week. Don't get too carried away with your downside targets, but this thing could go, 20, 19, something like that. It's probably not going to 17, 16 type of numbers. Understand that Walgreens is not a highly volatile, really fast mover. So be realistic with your expectations, but lower seems to be the path of least resistance. So markets overall are flat. The S&P's up a bit, but the broader markets, you look at 100% of the stocks, more weakness than strength of late, and we're relatively flat. Another burst higher could be coming, though, in that a lot of times these things finish with a bang. You can almost wait for the pain trade and see who's in pain. And right now, you'd have to say the short sellers are much more in pain than the buyers. So don't discount the possibility of more pain being inflicted here for a period of time if markets want to go higher. Final GDP comes out on Thursday, and then on earnings, like we talked about, we've got Carnival Cruise, we've got GameStop, McKesson, Walgreens, which we highlighted as well. Hope you enjoyed this market roundup. Have a great week, everyone. We'll see you next time.